Hello and welcome. You are watching this very special edition on Business Today Television. I'm Sakshi Patra. We are approaching the new year and it is a great time to review 2023 and also share an outlook on 2024 when it comes to investments via mutual funds with all of you, and to discuss the top trends for mutual funds in 2024, where will the smart money move to and how should you plan your mutual fund investments for the new year. I'm now joined by somebody very special. Radhika Gupta joins in. She is the MD and CEO of Edelweiss Mutual Funds, also known as a shark now. Welcome, Radhika. It's great to host you on Business Today Television again, and season's greetings to you.
Thank you, and wishing everyone a wonderful sort of festive season.
Wonderful to have you. So tell us, as we wind down 2023 and are now looking ahead into 2024, how would you really describe the year gone by for mutual fund investors, and what is your outlook on 2024 for mutual funds?
So I think it's been a great year. I mean, look, any person I meet is like, I'm very happy. My mutual funds have made a lot of money, all of that. I think, everybody knows. And, you're asking me outlook for 2024, but the reality is when we were sitting at the beginning of this year, end of last year had been such a tricky year that people didn't have the kind of optimism for this year that one expected. And I think the biggest learning is that markets can surprise you when the momentum can turn, and it can turn and how. And you see the indices being up 15-16% and mid and small caps doing what they do. So I really think, while it's called Outlook 2024, 1 year outlooks are very hard to think through. And I like to think in buckets of 5-10 years. But I do believe that over 5-10 years, there is a great story for mutual fund investors. I think we are living in a decade where India will see incredible growth, and all of us as investors are benefiting from that and will continue to do so. But a particular year is always hard to predict.
Right. 1 year is hard to predict, but you can definitely tell us the trend. We've already seen those 17,000 odd crore rupees of SIPs at record levels, near 50 trillion of assets under management. So where do you see that going from here?
Look, I would not be surprised if the industry does, very solid double-digit growth. If the industry is growing at 18 to 20%, I'm talking MF industry, that would not surprise me. I think investing in mutual funds and SIPs is a structural trend. Even if I do a poll on the sets of Shark Tank with a crew and ask how many people know the word SIP, 90% of people will raise their hand. Now, not all of them would have done SIPs, which is an opportunity for us. But the reality is that I think Indians, the whole movement towards financialization, whether it is insurance, whether it is mutual funds, is here to stay. People want more from their assets. And I think, we were at the MPW when SEBI chief said it, for a retail investor, mutual funds are the best way to park your savings into equities and create wealth. So I think people are recognizing that. SIP, when I joined the industry, Sakshi, in 2017, the SIP book was 4,000 crores. And I don't think anyone could have predicted it could be 17. I think 5 years from now, you will see a 35,000 crore SIP book in India.
Wow, that's wonderful.
Incredible, which would be incredible for our capital markets.
Amazing. Since you mentioned about the SEBI chairperson at our event on Most Powerful Women Awards, she also mentioned about, SIPs or sachet SIPs of 250 rupees odd. What is your own thought process of launching a lower ticket mutual fund SIP? Will that lead to more people coming into the fray? Because we are still talking about just 4 crore mutual fund investors in India on a huge base of our population. But even when we compare it with 8 crore DMATs in stock markets or maybe 25 crore FD accounts, we are still far away. So do you think there are drastic steps needed for maybe, like what she said, SIPs of 250 rupees, maybe that can reduce this gap?
So I'm not sure what the context of that quote was, but see, many fund houses today, including ours, all offer very low ticket SIPs. Like most of our products are at 100 rupees, if not all of them. Multiple other fund houses do that. Industry-wide, people may not do it. So, lowering the ticket size is good, but also remember, lowering it to 10 rupees, I don't think makes sense because, really you're investing in irrelevant amount. Today, if you look at India, 140, crore Indians, 12 crore Indians are effectively what I call rich kind of Indians. And
Hmm.
I don't think lowering it to 10 rupees, then you're just investing irrelevant amounts in the
Yeah.
market. I think the two things you need are, and I absolutely agree with you, DMAT numbers, fine. FD numbers, fine. We have 10 crore plus crypto investors in this current. Many more online, these are newer industries, right? FT is old. Many more online gaming users, many more food delivery users, many more Netflix subscribers, right? These are newer industries. So I think, the comparisons are fair. Two things that we need continued work on. One is KYC and just ease of doing this. I mean, it should be as easy to purchase a mutual fund as a Netflix subscription, or order online. I think we still have a lot of work to do on the KYC front. Both starting, amending, etc. This needs to be a lot more seamless. I know people are working on it, but it's a space that needs a lot more work. And the second is education. I think Fund Sahi has done a great job, but there's a lot more we can do in terms of simplifying consumer decision making.
Yes.
One of my learnings from hanging out with a lot of consumer businesses is it's very easy to choose in a lot of industries, but with us, people say 4,000 mutual fund schemes. How do you make those choices in that
Yes.
education? Well,
Yes. Fair enough, and that's point very well taken in as well. But now, of course, these are challenges that the industry will continue to work on over the period of time, and we are hoping that as the industry has managed to grow so far, there'll be many more multiplications or multifold times that the industry will now grow on going forward from here. But tell us, what were the top trends in 2023 in mutual funds? Where did the money go into? And as we step into the new year, what will be the mega trends of 2024 when it comes to mutual funds?
so I think few things that, what trends would have had. Mid and small cap was probably the word of the year.
Yeah.
You saw a lot of money flow into mid and small caps. And while I think, people are concerned about it, and I think concern is valid because the worry is people look at 40% small cap fund returns over the last year. I mean, I was just looking at our own fund, and expectations go awry. I think that's always a worry. The fact is, I think our mid and small cap companies have expanded. In fact, one of my fund managers was telling me that at our current size, our small cap companies are the size of global small caps. Our mid cap companies are no longer mid cap. So I think the segment will remain interesting. And if you genuinely want to build an India portfolio, mid and small caps have to be a part of it. Now, running after micro caps because of last 1 year return is a problem. But this was probably the number one trend of last year. I think within mutual funds, there was a major event, which was the debt tax change in
Yes.
March. And so you saw less flows into debt funds, but you continued to see activity in hybrid funds. So people said, I'll use asset allocation funds like aggressive hybrid or balanced advantage to do my equity debt allocation. I'll do 75-25 there and be more tax efficient. I think that trend is here to stay, especially if this taxation is the way it is. I see a lot more people taking interest in hybrid funds, even HNIs who said, oh, hybrid is for retail, this is not for me. I think that's one trend.
Okay.
A third trend is sort of the mushrooming of different investment styles. I think more and more players are entering the asset management industry. I remember when I joined 6 years ago, people said it's about value or growth and 5, 6 AMCs. I think 5 years ago,
Yeah.
it's about value, growth, momentum, quant, passive X, Y, Z, smart beta, and 70 different AMCs. And I think openness towards new investment styles is just getting better and better. So, which was not the case 5 years ago. So I think I saw that in 2023 with some new age ideas doing well, new age companies making their entry into the market. And I suspect that will continue. So we'll have our own share of disruption in startups in this space.
Okay, more disruptions, and then we will continue to see. But what about thematic? People looking at thematic funds, where should one put in money if somebody is only interested in thematic funds for 2024?
So I think thematics, you have to be thoughtful. I know lots of them were launched this year because entry and exit timing is extremely important. And I always say broad-based themes are better than very narrow themes.
Okay.
Where markets have run up, one place where we certainly will be launching a fund is tech. We think that the worst of tech has kind of come to an end or will come
Okay.
to an end. That's one sector that hasn't participated in the rallies we've seen. So that is one place. Manufacturing is another one. The whole beneficiaries of private capex in India. That's something we've already expressed in a lot of other funds. But despite saying all this, I'm going to say your core portfolio should still be multi-cap, balanced advantage, aggressive hybrid, dal chawal, all of that. Thematics are always satellite.
Okay, got that. So that's the clarity. There's one more age-old debate, like you also briefly mentioned, active versus passive, and we are seeing a lot of new age companies clearly focused on just launching of passive funds. Why is that really happening? And is that the case that passive funds over a long term make more money, or should one go with active? Should one go with a balance of both? How would you advise a fresh and new investor approach these two?
So I think firstly, asset management companies will launch different businesses because that's what they have to, active businesses take time to build, they take track record to build. Some people think they'll launch passive. So I don't think the actions of an asset management company, even though I run one, should decide what you do as an investor, quite honestly. For the consumer, I think there is no debate between active and passive. You do what works for you. I always say
Okay.
people eat at fine dining restaurants and they eat at standardized Pizza Huts at different times because it works. And I don't believe the narrative. When I joined in 2017, there was this whole narrative that large cap funds don't beat the benchmark. In the last year, most large cap funds have beaten the benchmark. So passive should be adopted, and we run a business that's about half active and half passive. Passive should be adopted because of product simplicity. You don't want to take the choice to find the a particular scheme. You just want a simple solution. Like for my son, I started a SIP into a passive large and mid cap 250 product because I just wanted broad market exposure over 18 years. But
Okay.
in a space like small cap, for instance, or IPO investing, I think an active approach has its merit. So for the consumer, more choice is good, and it's not active versus passive. It's not an ideological debate. It's two kind of choices. You do what works for you.
Wonderful. So there you have given a lot of clarity. So let's even delve down deeper and break it down even further for say a absolute new investor who wants to initiate after this video into mutual funds. 5 categories that every investor out there must be invested in mutual funds.
Firstly, you don't need 5 categories, but I'll give you a
Okay.
few. If you are doing contingency funds, because everybody needs a contingency fund, please pick a liquid fund or an arbitrage fund. It's very important to take care of contingency first in life. If you want to do equities and you want a good, simple, active fund, dal chawal of active funds, a multi-cap fund is fantastic. It has everything. If you do nothing else in equity, I think you're covered. If you are a new investor in mutual funds and you are conservative, rather than holding 100% equity, you can hold 75% equity and balance 25% debt. There's a beautiful category called aggressive hybrid that is 75-25. So it's like taking my multi-cap idea and scaling it down by 25%. So
Okay.
aggressive, normal investor, multi-cap, conservative investor at 25% debt, that's aggressive hybrid for you. If you want to do a very simple passive fund, you don't want to think, Radhika, which multi-cap fund should I pick?
Yeah.
Pick a broad-based index fund like a large and mid-cap 250 index fund, very wide exposure to top 250 companies. I think between this, I'm not even telling you a fifth fund. Your problems are done.
Perfect. So this also gives a lot of clarity to all our viewers. Another thing that they get stuck with is how to select. Now these are categories one understands, but like you also pointed out, 4,000 schemes. I mean, like so many categories, so many AMCs, and so many schemes out there in a similar category. So it's a crowded space out there. How does one identify these funds for themselves? I mean, are there any top 2 or 3 identifying factors that you can help them simplify this?
Yeah, I mean, I think it's the same thing. If you go to a restaurant, you usually check location, budget, ratings, and cuisine. I think there are a few in mutual funds. First, check your goal. If your goal is, for instance, 3 to 5 years, equity funds are ruled out. Debt funds may be too conservative. Hybrid funds are good. Check the AMC. You want AMCs that you trust. You want AMCs that you want to deal with. Check the long-term track record. Long-term, I'm emphasizing the 5-year track record of the fund house and equivalent of ratings. Please use a financial advisor.
Okay, and that's also a perfect advice, and I hope and wish that all the viewers are taking down all of these notes. Please go back, revisit this video as many number of times, because this is the clear and the best advice that you can get when it comes to mutual funds, clearly. All right, what about, a lot of AMCs are also launching, including you, commodity based funds as well, gold, silver. Are they, something good when it comes to other forms of investing in gold and silver versus mutual funds? How should one approach them?
Look, I'm a woman. I know India loves gold, but I think you have to think of gold as not jewelry, because jewelry is not an investment. Jewelry is something that you enjoy. Then financial gold, whether it is through sovereign gold bonds or funds in ETFs, is a better form of investment because it doesn't have the custody and safety and breaking issues. I do think that in the long term, the core of a portfolio will be equity. Gold can be a hedge against the rupee and inflation. We have gold and silver ETFs. We also launched a nice product that I think works for many people, which is a simple blended gold and silver fund. You just park 5-10% of your portfolio into it and you get exposure. I would advise investors against timing the entry and exit into gold because people do quite a bad job of that.
Okay. Since you talk about the debt fund category, the impact of the budgetary announcements last February and March, I want to understand going forward, there are going to be two events. Of course, we are going to have two budgets right there, and we are also going to be seeing interest rates fall down. How will that scenario play out on the debt funds going forward? And if somebody is holding on to debt funds, what should be the strategy?
I think you should hold. Look, rates are going to fall. So if you have long-term debt funds, they will make money. Again, I think debt timing is a very difficult thing. It should be a part of the asset allocation. But I truly believe fresh allocations to fixed income, even though I run a very large fixed income business, should be via hybrid funds because for most people, it is far more tax efficient.
Okay. This one statistic that I wanted to point out, which I think you also mentioned on your Twitter, we've been seeing the stock markets at record high, and so much so the frenzy in the IPO space as well. And people are getting FOMO, they're applying and they're getting rejected because of the oversubscriptions. And I think you pointed out a better way to get IPOs allotted is via mutual funds. So could you clarify that point one more time?
Yeah, I think, look, there are multiple problems in IPOs. One is nobody seems to get allotment. I mean, there are memes about the lack of allotment in some IPOs. Secondly, people don't know how to pick IPOs because the DRHPs are so long. I mean, and the third is people sell the IPOs too quickly. I mean, the listing day gain is not a judgment of how an IPO is going to do. If you don't believe me, go check what happened to Page Industries when it listed many years ago. It was down 30% on the day of IPO, I think. And look what it's become. We try to solve these problems through mutual funds. I think we run the country's only retail IPO fund. It's Edelweiss recently listed IPO fund. And the idea there is that we participate in IPO companies on the last 100 newly listed companies. And, we have a dedicated analyst to work on IPOs and think through this for you. And we tend to be long-term holders in companies. And look, IPOs, even though I have a fund, I'm going to say it's a very volatile category. So these are new age companies. If you have to do this, by the way, do this via SIP.
Okay, and of course, in new year as well, there are 60,000 odd crore rupees worth of funds that will be again up for grabs via IPOs as well. So the IPO space is going to remain red hot, and perhaps a better way is via your SIPs in such funds as well, and let the fund manager do the job of picking the right IPO for you, and therefore higher chances for you to get those IPOs as well. All right, your own budget expectations this time around, Radhika, what would they be? Because we're just about 1.5 months away.
It's a budget that's before the election. So actually, not too many expectations. I'm hoping it's just a continuation of what we've seen in the past. And one of the things I've liked in the recent budgets is that a vision for Atmanirbhar Bharat, a vision for growth in manufacturing, focus on capex was laid out a couple of years ago. And the last few budgets have been continuous execution of that vision. I always believe India needs two things: continuity of policy, especially tax policy, and continued capital investment and less populism. If these two things we can achieve, then I think we've done an extraordinary job.
Fantastic. And you know, this conversation can be endless. There is so much to understand from you when it comes to the whole space of mutual funds. But because of the time paucity right here, one last question, in fact, two last questions from you before I let you go. One will be again on the fact that we were discussing a little while earlier on just 4 crore mutual fund investors and how the efforts need to be to increase this, you know, number base going forward from here. Why do you think an investor who's not yet initiated should definitely invest via mutual funds and should have a SIP way of investing in mutual funds?
Because it's the easiest, most accessible at low ticket size way to get your money professionally managed by a regulated fund manager who works for you, and to create wealth in an India that is growing and creating wealth. And SIP is a great way to set money aside. I mean, I do SIPs for all my staff, anybody I see. I tell them do an SIP because it's not just a wealth creation instrument, it's also a great savings instrument.
Wonderful. Tell us lastly, you know, what is your New Year resolution going to be now?
My New Year resolution is to relax a bit because I do a ton of things, as all of you know, and I'm also mother to a young son. So my New Year resolution this time is just to unwind and not make new resolutions and not plan new things because I'm doing enough of them.
Okay, wonderful. All the very best to you, Radhika, and thank you so much for sparing all your time with us and explaining to all our viewers the best way to approach mutual funds and why exactly. And it's always a pleasure speaking to you and listening to all the wonderful insights you have to share.
Thank you.
Thank you. All right, we will wrap up this very, very special conversation on the outlook for 2024 series. That's a New Year's special series that we've got for you. But do stick around on Business Today TV as many more conversations will be up on your screens pretty soon.